All right, what is up, you guys? Hope everyone is doing well. Going to be going over the one trade I took today, currently up around 1R, and let's get into it. This is going to be a super saucy video, so much to talk about, so many things to learn from this. So everyone, strap in, dial in, let's get into it. So, starting off with the daily bias for today. Hello? There we go. Sorry about that. So starting off with the daily bias today, I was initially leaning bullish. And so the reason for that, I hate when they show the entire candle. The reason for that is that we're still in this high time frame, market maker buy model, right? The draw on liquidity is obviously high time frame. You can say what you want about the economy, say what you want about whatever's going on. This is just a market maker buy model, and the draw is to the relative equal highs up here, and then eventually all-time highs. So still bullish, and then the low time frame narrative support that. So prior to this hourly candle, we had London lows. We had London lows intact as well as London highs intact, and so London took Asia highs and Asia lows. So I was potentially expecting search and destroy conditions, but I mean, open to just see what would happen. And then so we did have 8:30 news. So 8:30 had a little manipulation lower. We put an SMT at these lows, came up, took London highs. Now at open, we still have these two unfilled 5 minutes. So I was looking to see if we could respect these fair value gaps to get a continuation model higher to the internal draw on liquidity as well as the external draw on liquidity. But with that being said, we opened up this 15-minute. And if I was going to be bullish, I wanted to see us hold this 15-minute fair value gap. So recently in the past few months, I've changed a lot of things about just the way I see the markets. And this is by far the biggest thing that's changed my trading for the better, is having conditions. So at open, if I can expect price to be bullish, I'm going to expect us to come down into this bullish fair value gap at the time and send us higher, supporting the PD array. Now, if we close below this, I mean, this is also just like a super clean inversion fair value gap 3 candlestick model, which I'll get into for the actual entry. But now I can expect price to be bearish to send us lower to the rest of this low resistance liquidity with previous day low and just these low resistance lows. This is also like a accumulation, manipulation, distribution move that we have unfolding here. But I essentially flipped my bias after I saw that we invalidated this bullish fair value gap. So after that, we obviously had London lows below, and we had a small SMT at the time here. And so after that, I was essentially just looking for a continuation model because the draw on liquidity is still lower. Yes, we could SMT this. At the bottom, this could hold and we could go higher. But, I mean, an SMT normally doesn't form. And this is just like something I've seen so many times. An SMT doesn't normally form with this such of a steep angle. And the draw is also just lower on ES. But, yeah, so like we inverted this fair value gap. I want to see ES come down and hit London low. So I'm bearish now. And so what's my model when we dump a lot? And I'm going to be flipping my bias to an obvious draw on liquidity. It's a continuation model. So I'm looking for a tap into, a 5 or a 15-minute fair value gap, taking the highest time for inversion out of that fair value gap to the obvious draw on liquidity. So at the time, we did have this high time frame SMT here between London lows and this internal low. But the way structure is moving, I'm just bearish. And so normally after we have a big dump, we'll normally just be able to hop in on the first fair value gap that's presented in the move. We did have this 3-minute, but I didn't really care about that because I want to see this 5-minute get hit. And so exactly what I want to see happen, we have an SMT at this low, keep in mind still. We came up, manipulated this 5-minute high. I think we manipulated this. I can't see the We manipulated this candlestick by one tick as well, and we got the highest time frame inversion out of the 5-minute fair value gap. And this is, I mean, pretty good entry. I would rank this probably like an A minus setup. This being a high time frame SMT with the potential of it holding does make it the A minus. If this was like more low resistance liquidity stacked up down here and we didn't have the SMT, this would be A plus. But this was super good. I mean, this was like a light bulb trade. Like I saw this, and I was like instantly in it. So I'm in 2 contracts. Stop loss goes above the candlestick high if I expect this trade to run to my take profit. I don't expect price to come back up here, and a resweep would invalidate the trade, and I wouldn't be interested in shorts most likely given that we have the 5-minute above here that we could probably fill more. And so I took the 30-second, and this delivery was atrocious. Well, wait, first break-even point right here. Internal low, we also had a 1-minute fair value gap, so if price was going to come up and respect this, I could expect break-even to run. And I ended up closing, the TP was the obvious draw on liquidity lower. We also had the London lows lower. And so I did close around here because we put in an SMT. Now, this is the first point, the first mistake I made. I mean, I got out because this candle was the start of it. If we look over here at ES, I took one off here. I mean, pretty bad fill, to be honest. And then after we reswept this, I took off the second contract. And so this is a mistake. I mean, this is still a good habit day, still excellent trade, but this is just a very difficult delivery. And so part of the reason why I closed this was because I expected to get stopped out at break even after putting in this SMT. Now, you might be asking, like, why is that a mistake? Because this SMT is not valid. When we have an SMT, let me just get out the drawing tool here. When we have an SMT, it has to be inside here. So let's say we have this. We have like an SMT at these highs. So an SMT, if you don't know what it is a decorrelation between the assets. So like if the NASDAQ takes this low and the S&P doesn't, that indicates that that price is going to go higher. This is what a bullish SMT looks like. So like imagine this low is the same as this low. We don't take it, we put in SMT, a divergence in the two assets, and that's a bullish confluence. So after putting this SMT, I'm like, all right, I think price is probably going to reverse to my break-even point because this isn't a clean delivery. And the reason why this is not a valid SMT is because we're not reacting off of anything significant. We take a look inside this this leg that we're currently trading in. There's like no imbalances. Like this is on the 1 minute. There's no imbalances in here. On the 30-second, we inverse this 30-second here. So that means the price should go lower. I mean, the delivery was atrocious here today. But that's just one really important thing I need to remember. If this was inside a fair value gap, for example, then it would be a valid, like let's say we were like still inside this fair value gap was bigger, then that would be a valid SMT, and I could probably expect price to reverse off of there. But this is just not a valid SMT. And I mean, obviously I had the correct draw on liquidity. I initially had the limit order set for this low, but I took it off early because I just completely forgot that this was not a valid SMT. And I think one thing I have to work on when taking lower time frame entries like 30-second and potentially like 15-second entries is simply just zooming out. Because like, yes, this is not a clean delivery, but the draw on liquidity is still lower. Like, there's no reason for us to go higher, especially after the signatures that price is showing off of this 30-second for value gap. So 3 candlesticks is the best price action you can see on the inversion model. Super clear displacement. This candle lightning fast through the fair value gap, and we actually leave this fair value gap untapped, making this a breakaway gap. So a breakaway gap is a fair value gap that we do not tap because price momentum is in favor of the draw on liquidity. We did come up and tap this 30-second again. So if you did, I entered like right as this candle opened because that's my model, and I got a little bit sloppy with the fill, not completely at the top of the candle, but like a limit order here on the top of the fair value gap. That's a great entry that I'll sometimes do if the risk to reward isn't favorable on that initial entry. So that was the trade that I took. Obviously very happy with how I played it today. Just the one thing I need to work on, just zooming out once I'm in the trade setting, forgetting, just leaving it to run to take profit. After that, we did come down and tap this hourly high, and there was a 2-minute entry here that I was honestly looking at as I got off the elevator and back into my building. Had a limit order at the bottom of the 2-minute, just like theoretically. I didn't actually have a limit order, just like looking. And this is invalid because, I mean, you would go TP at the unfilled 15-minute that we opened up here, but we never came back and tapped the 2-minute. So like if you're entering up here, that's a negative risk reward, 0.41. Can't enter that. There was this 30-second turtle soup down here, SMT off of these lows. This is technically a buy model, but yeah, I just didn't take this. I mean, I like turtle soup is a confluence I'll use, but it's not my execution model. So didn't take this. Already also took the dub on the day. So that was that. And this is also just high resistance liquidity run conditions. So like we have taken Asia highs and lows. We have taken London highs and lows. So like we come up inside this 15-minute, like we don't even take the internal high. And then we come back and just take this low. So from here, I do think the draw on liquidity is going to be lower to previous day low. We're not reacting off of anything. And we do have this SMT at these lows, but like we're just not reacting off of anything. So I do expect price to run lower. We'll see if we want to do that today or tomorrow. Maybe we chop today and we can get like a remanipulation of like, I doubt it'll be this high, or like some sort of high inside of fair value gap to send us lower to the previous day low. And then, yeah, I mean, so that's pretty much it for today. Lot of sauce today in the video. So just like things to keep in mind when entering setups. Obviously, what is my bias starting off, and then what's my condition to flip the bias? That is something that's super important. I used to just like stick with my bias 100% every single day. And I would just be upset when I'm caught on the wrong side of the stick, essentially. Like I'm bullish. I don't take into account that 15-minute inversion. I'm still trying to take longs after that. And that's just how you don't get drawn liquidity correct. So using the 5 and 15-minute fair value gaps as your conditions is super important if you want to get drawn liquidity correct. I mean, that's how I've pretty much been able to call drawn liquidity like every single day for like the past few months, execution aside. I know I can tell you where price is going, like on a pretty sure bet, as long as we have just like favorable conditions. So that's the first thing. Second, SMT. When is a SMT valid? When it's inside a key PD array or draw on liquidity. SMTs that aren't inside draw on liquidities not inside fair value gaps or at significant high time frame draw on liquidity simply do not matter. All that matters is where is price going toward that draw on liquidity. So that's why the SMT was invalidated. And then the third takeaway, simply just set and forget. I'm taking my execution model for a reason. It's where I expect price to run. Simply just have to keep the stop and keep the take profit where it is. I mean, I know I have my model here, 78 to 80% win rate, and that's me just setting and forgetting my trades. So did leave some profit on the table today, but overall played it really well. Super good, well, I guess not super good price action, but pretty solid price action. A lot to learn and take away from today. And yeah, it's been a really good week so far. So hopefully we can get another good day of somewhat decent price action. Hopefully we can get a good setup tomorrow. If not, I'll be perfectly content with how it is. And yeah, that's going to be all for today. So if you guys like this video or gained something, maybe drop a thumbs up. Maybe not. I don't really know. But yeah, that's going to be it. So hopefully you guys enjoyed this one. And I will see you guys tomorrow. Peace.